Retirement Tips Radio is brought to you by Business RadioX, the voice of business in your community. Currently serving over 25 markets, the Business RadioX network is growing fast. We're teaming up with retired execs and established entrepreneurs to support and celebrate local business leaders. If you'd like to make additional income while making a difference, discover more at brxteam.com. Now, here's your host.
Lee Cantor here, another episode of Retirement Tips Radio, and this is going to be a good one. Today we have with us John Smallwood with Smallwood Wealth Management. Welcome, John.
Thank you so much.
Well, before we get too far into things, tell us about Smallwood. How are you serving folks?
So we are a wealth management firm that deals with a lot of business owners, and our goal in working with the business owners is to help them structure themselves so they have, let's just say, the most asset protection that they can get, but also great tax benefits to get as much money out of the company as they can, and then eventually sell it. So we're working with the financial side of that, trying to understand how they can get money out, maximize their tax benefits, protect it, grow it. And then when they sell it, it's not something that's valuable to them so that they can continue their lifestyle and their enjoyment. A lot of people will sell their businesses and haven't accumulated enough money on the outside prior to, and the sale is wonderful, but it doesn't produce the income. So get people thinking strategically is what it comes down to.
So now, how did you kind of stumble into that niche? Out of all the different paths you could have gone in your career, why did you find serving business owners as the way to go?
I think what it was is I was an accounting major for a couple of years in college and realized I didn't really love accounting, but I understood it. It was the finance and the economics. And when I figured out that I could apply both sides, the business owner is a unique person because you control both sides. You control your P&L. You control how your money moves through your business and how you get paid. You also control your time. And then you have the personal side where we work with a lot of corporate people also, but you're limited to just the personal side and the benefits and the things that person receives. With the business owner, it allows the creativity to really come out. And I found myself, I've been doing this for 30 years, and I found myself really enjoying the complexity of the business side and really, it's kind of like unwinding it to understand how the business got to where it is and how can we make it more efficient. That's really, and there's an enjoyment in it. There's a fun that happens in that.
Because it sounds like you're helping the business owner kind of wring out all the value, which there's probably a lot of it they hadn't even considered while they were growing their business. They were just heads down and growing their business.
Yeah, I mean, you're so focused on, whether it's growing sales or engagements or consulting agreements or whatever that, however you term it to be, that you're doing what you do and you're doing it really well. And then, the money sort of hits the company, and then you have payroll and you have people and you have teams and you have technology expenses and equipment. And all these things are really, there's multiple ways to approach it. And there's some that are more efficient and some that are less efficient. And the idea is, I have this concept that I've been talking about for a long time called financial leaks, right? There's these pressure points that basically just add extra layers of expenses into a business structure. It's also in your personal side. And like, for example, I was talking to a client the other day who owns a business, and it was a new client. We're going through the process. They're having some issues with their revenue because of the COVID, but they're still pretty good. But one of the things that we were going through is we were looking at all the layers of insurance, but I wasn't looking at it from the insurance perspective, whether they were covered properly. That's important also. But we were looking at how the business was actually paying for it. And, all the different layers of insurance, everything was paid on a quarterly or a monthly basis. And we figured out there was about $10,000 in finance charges to pay for that. And he wasn't aware of that. If he paid the premiums annually, he'd save 10,000. And, that's 10,000 that falls to the bottom line, falls to the profit. And, in the Trump tax law, if it's, an S corp or a proper structure of an LLC, that's qualified business income. And the qualified business income, pay tax on 80% of that if it's structured right. And that's the thing that, so you start looking at all these little things, and you start looking at top line, you look at the cost of goods sold. If you can pull out 2 to 3% on each line, what falls to the bottom line is unbelievable, which drives the value of the firm if you're going to sell it.
And that's now, and then people aren't, that's not the lens most business people are looking at their business, right? And that's where it's important to have an expert, kind of a trusted advisor by your side that's kind of watching your back to make sure you are taking advantage of the things that are, to you, this is obvious and it's probably right in front of your face like a neon sign, but to the business person, it's kind of buried in the minutia, and they can't even see it.
Yeah, you'll get to it later. 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 And it's like, because you're worried about front sales, you're worried about things that are happening. A lot of what you're looking at is you're really good at what you do. That's why you're an entrepreneur. That's why you're a business owner. And it's all what I see is the same things that occur in the business happen in the personal. And there's a tremendous amount of money that's just going out the door that doesn't have to go out the door. And if you can restructure yourself and take sections of the balance sheet or the P&L and make them more efficient, even the debt payments, like, companies that are paying, the way the debt is being handled, sometimes, is it long-term debt or is it short-term debt? Are the interest rates right? There's so many little nuances that you constantly want to look at and tweak so that at the end of the day, if you can pull out, 15, 20,000, 150,000, 200,000, 800,000 more because of the way you structure it, that goes to the bottom line and it builds your personal wealth. And then once it hits your personal wealth, well, how do you protect it? And, there's the law of unintended consequences, right? I'm a business owner. I open up my business and I don't have a track record. So I end up, signing personal guarantees on the leases. And, stuff happens, right? People become disabled. Things happen. And what they didn't realize is they personally guaranteed leases. And in this environment where corporate leases and things like that are going down, as far as businesses in the Northeast, as far as commercial space, people are working from home and the offices won't be as big. These things could just destroy what is, taken years. So you really have to look at all of your contracts and understand what is in my business that I have personally guaranteed. Most people they're not aware of that. And what insulation and layers can I put between that, and how can I restructure these deals? Sometimes you can't, and until you renew your lease or something to that nature. So there's so many. What's exciting about the business owner is the vision of where he or she wants to go. That's the exciting part of it. And then it's looking at the pieces that are out there and understanding all those components that make that business successful. And then it's, I'm working with a very successful firm that they're growing very quickly. But the way the accountants had them structured is they virtually didn't receive any qualified business income from the structure. And we spent the last, prior to last year, restructuring it so that they can, a 7-figure type income, which had no qualified business income, is now going to get about 800,000, 900,000 of qualified business income, which, that's a tax savings of at 37% plus the state, you're talking almost 80, 90 to $100,000 of tax savings. And that's tremendous. And it's money that was just going to a place that most people don't want it to go. They'd rather go to their pockets.
Right. So that's where an example of without the right advice, a little thing becomes a big thing pretty quickly.
And buy-sell agreements, right? So people get together and they say, "Hey, we're gonna start a company with Joe, Bob, and Sally," and everybody's contributing and everything's great, and they don't put together an operating agreement out of the get-go. It's like, when we make money, we'll do it. And what happens is, somewhere along the line, one of the three stops producing, and there's no agreement that says, there's no contribution. There's nothing that says Bob needs to keep working in order to get his share. There's nothing that, and that's what happens. People come in and they just sit and they coast. And the other, I see this all the time. People are working, together, and early on they're 50-50 contributors, or 30-30-30, or somebody's got a unique ability. They're doing something in the business and the other person is bringing in the sales, but the two together can't survive without each other. But then all of a sudden that person, gets a second home somewhere and never shows up in the office and doesn't dial in, but he still wants 50% of the profits. That's not good, right? So that creates a lot of havoc. And I see that all the time. And people give ownership away without really thinking through it. That creates problems. So, all these little documents that the business owner should have, the agreements, the goals, the contribution goals, there's ways to facilitate it and implement it. Now, we're not attorneys, but we're people that are going to look at this and say, when we go to the attorney and we start drafting, these are considerations that you should really be thinking about. And most of this stuff is based upon 30 years of seeing really bad stuff happen, right?
Yeah, there's been some scar tissue there. It sounds like a lot of scar tissue.
Yeah, a lot of scar tissue. You make really good decisions and you look back at them and they're either really good decisions or they're like, why didn't I see that? How did I get there? And that's something that you see in a lot of businesses. There's great success, and then all of a sudden there's not. And there's ways within the operating agreement and the structure that you can create compensation structures based upon contribution, so that you can minimize the amount of money that goes to a non-producing person. Or you can, trigger a retirement clause or trigger a buyout clause. But even that's so subjective. Like, I've seen so many buy-sell agreements that don't address the valuation properly, and they don't address if the partner is disabled and he's not coming back. They don't really address how they're going to pay that person out, and it presents a lot of problems when that happens. Because let's say partner A becomes disabled, and he or she was doing 70% of the production sales, right? And now that's not happening. Was the rest of the organization able to maintain it, or is the business falling apart? And now I've got to buy out a business that is under duress,
right,
at a price that may not be appropriate. So, there are ways to protect against it. You can insure a buy-sell, you can go uninsured. There's pros and cons to everything that you're going to do. And our philosophy really has always been, let's build this blueprint. And as the business owner, we're going to build a personal wealth curve blueprint that we put together, which is a snapshot of everything that you have personally. And then we're going to build one for the business. And the business is to really understand, what the cash flows are in the business, what the liabilities are, how well it's protected, and where the operating agreements are, the lines of credit, understanding on the lines of credit, what the covenants and the restrictions are. Are you maximizing depreciation? Do you own your own building as part of your own business? Is it part of the business, or is it in a separate entity? Have you taken, big thing that I've seen over the last few years is in the depreciation side, they came out with the ability to change your depreciation schedule. There's that cost segregation method that your parking lot has a different life than your roof does and your stairs do. And it used to be you just had straight line depreciation, and now you can change that depreciation schedule and get a lot of depreciation up front. Well, that's a decision that you're going to make based upon how you think your cash flow is going to be. You may not want it all up front because your cash flow is structured that you have other things that are going to offset taxes. So there's these, the business is a unique breathing animal, and the person's personal wealth is the same thing. And in my opinion, you can't make decisions without having both sides of that equation.
It has to be a holistic. You have to look at the totality, right? It's hard to kind of just work on one side of this without taking the other side into consideration.
Right, because if you make a move personally in your personal plan, how does it impact the business, and vice versa? If I change something in the business, how is it going to affect me personally? And you see it, and this is the problem that I trying to get with the small business entrepreneur. We have this mindset because I'm an entrepreneur. I've been doing this independently for 30 years. My father and I were partners until he became sick. And we had to trigger all the buy-sell agreements, and those were all good things. They're never easy when it's family because you put these agreements in, and then there's the emotional side of it, right? Okay, but it's that big picture, in looking at the big picture and understanding how all those puzzle pieces fit together. And how am I going to address those issues? And then as new things come in, new tax laws come in, new opportunities come in, how do we keep morphing the business so that, we have this tendency to put all of our chips into the business because that's going to be where, hey, we're going to make the most amount of money. And that's very, very true. But a lot of small businesses aren't sold for the amount of money that they think they're going to be sold. And what happens is the business is gone, and we haven't accumulated enough money to maintain our lifestyle. We put 35 years of blood, sweat, and tears into this thing, and we can't even we should never have sold. And that's the issue that I want to get that fine balance to say along the way we need to put money out of the business outside. Periodically, the business may need this money, right? But it needs to be on the outside because the business will consume it all. The business will consume the money that's there in most cases. It'll find a home and it won't be in your pocket.
Right. It gets spent. If it's in there, it'll find a way out of there.
Mm-hmm.
Now,
and if you don't make it relentless to get it out, then, yeah, you're exactly right. So go to ask your next question. Sorry to stop you.
Now, when you're working with folks that are on the path to retirement, is this something that you like to start working with them maybe at the beginning of their business so it isn't really fully formed yet? Or do you like it after they've already kind of have an established, it's already producing? Do you meet these folks just wherever they are in their journey?
Well, typically we meet them where they are in their journey. What I like to, perfect world, get them when they start would be fantastic. One of our largest clients came to us early on. He was working for a company and he was very successful. And the company that he was working with, every time he was successful, he was making more than the owners were based on his comp plan. They kept cutting his commission. And, we were probably working with him for 2 or 3 months. And he said, I quit. And he ended up, going into the same business and grew the business fantastically, ended up selling it. But he was a very successful person. So in my industry, a lot of our competitors have what we call, minimums, minimum engagements, minimum, fee structures, minimums. And we've always taken the bend of, I want to be part of your future and where you're going. And if you have a really good present and you have a great future, that's where I want to be. So I want to get with you sooner than later. And I want to work with you, and I want to, work with your team. Most people have an accountant, most people have an attorney, most people have an insurance advisor, most people have some sort of financial advisor. And the key is working together as a team. And some of those people are fantastic, and some of those people are not. And you have to look at the quality of the work and see, is this appropriate for what you're doing? And sometimes it requires rebuilding that team and looking at things differently. But ultimately, you have to think about it. It's your business. The book is It's Your Wealth, Keep It, right? But it's your business and it's your wealth. You need to keep it, and you need to get the money out of it. So, so that you benefit from the hard work. I mean, it's a lot of work running a business. And every time you turn around, there's some new law and regulation that's going to put financial pressure on you.
And that's why you do need this team of trusted advisors that can kind of help you watch out for these potholes that you may not even know are there, and they may not have been there the last time you checked. They could be new.
Brand new. And it's that collaboration that I think is really the greatest part of it. If you can get a team where the accountant and the attorney and the financial advisor, financial planner, CFP, whatever that person is, can all come together and work in a coordinated way. And nobody needs to be the star, but they can all realize this is, a collaborative effort trying to get the person to the next level. Then you've got a great team. You've got a team that's going to, brainstorm and work on this and do your tax planning all during the year as opposed to on April 15th.
Right. Where they get a box of receipts and say, here, what do I owe?
And they're pissed that they owe what they owe.
Right.
And then they go back to work the next day and they repeat it over again. Right. And that's, tax planning starts right now. And on April 15th and April 16th and right after that, because it's the decisions that you're making right now as you do things. And, we have this, the PPP loans, right? And the forgiveness of those loans. And there's still a tremendous amount of questions that are going to impact the tax, right? As far as I know, I didn't see anything that came out this week, but they're going to forgive the debt, but the way I understand it is they're not going to allow you to take the deductions for the expenses that you paid. So did they really forgive the debt?
Right. It's semantic.
No, they didn't.
Right.
No, you end up paying a tax on it. So that's not what the spirit of the law was. Now, who knows if they're going to fix it before we file our taxes? But that's not. So, we're looking at this going, oh, I got $100,000 tax free. No, you didn't. Right. And you better be ready for it if it's not.
Now, if there's a business owner out there that is kind of wants to have a successful retirement and wants to get somebody on their team that really can watch their back and really maybe take their business finances to the next level, what is the best way to get a hold of you? Because I know on your website, you have so much information in thought leadership and you have books. There's a lot of resources. Is that the best place to kind of find out more to see if you're a fit?
There's two websites. There's the John L. Smallwood website, which is really the It's Your Wealth, Keep It book, which can be purchased on Amazon. But on the Smallwood Associates website, we have our podcast. We have a whole bunch of downloads that you can do. But what we offer is we offer a free, 35, 40-minute, no obligation, what we call a wealth curve conversation, which is us sitting down and, we're doing it online. I've always done it online because I think that first initial meeting should be, 30, 40 minutes, find out about you, find out about your family, find out about your business partners, find out about the business, find out about your debt structures, find out about your kids, find out about the college obligations that you have, find out about your protection, find out about your parents, just really just sit and have a conversation about your plan. And what most people when they go through that conversation, they realize there's a lot of things that they haven't spoken about. And if you finish the call and you feel that way, then if we feel good about each other, we work together. And if you don't feel great about it, then that's fine too. It may not be appropriate, but that wealth curve conversation really is designed to get you to think strategically during that time frame. And it's not about me, it's about you and your stuff and what's going on in your life. Because you can read all about me and you can see that I'm on, I got a podcast, I got books, I've got awards, I got all this stuff. That's all nice. But the reality is, do we connect? And do we feel that we can help you? Now, we do work. I am in New Jersey. I do work from New Jersey to Florida to Maine to California and most of the states in between. You can see which states we are registered in on the website. And if you're in one of the states that is not, we can get registered in those states as well. So, but the key is, as a business owner, retirement is a combination of many things, right? This is retirement tips, right? And, it's not, the 401k and the profit sharing plan in most cases is really not for the owners. It's for the employees. So we have to really look at where, and, depending on who gets elected, there's going to be a lot of changes. So you better have a really strong plan heading into this, and you better have a really strong, ability to shift as things change.
And they always change. That no matter what happens, the change is coming.
The good thing for business, it always changes. The bad thing is it affects everybody, right?
Right. That's why the team is important. You better have smart people around you protecting you from the stuff that you're not an expert in, and be humble enough to take the advice.
Yeah. This is, the content that I put out, the podcast, the books, the intention is to provide the education. We have a 19 sources of retirement income guide. That's a free download. You put in your name and your email. We send it to you immediately. Most people don't have 19 sources of retirement income, right? I mean, most people have like 3.
If they're lucky, right?
If they're lucky. And what we're looking at is let's try to get you to 19 sources of retirement income so that when stuff happens, you've got backups, you've got redundancy.
You got a diversified portfolio.
You got a diversified portfolio. You got a diversified strategy, right? You've got a strategy that has many, and you think about this, right? And my feeling is most financial planners lead with some sort of financial product that's going to be the miracle solution that's going to save all of their lives, right? And that is so not true, right? They have a hammer, and my solution or my product is the solution to all of your problems. And the reality is all of those financial products that are out here in the world are important. The idea is to work on the strategy and then go select the appropriate products to fill the strategy. And when you combine them in a unique way for you, you're going to reduce risk. You're going to reduce taxes. You're going to reduce fees. You're going to end up saving more money, having more money, more cash flow in retirement, have more benefits and protection around your wealth, and pass more to your family. And, if your strategy doesn't do those 7 things, you really shouldn't be doing it.
Right.
Right?
You got to know where the true north is, and that way you can adjust your plan to get there rather than just hope it works.
Yeah, exactly.
Now, one more time, the 2 websites, John? JohnLSmallwood.com and SmallwoodAssociates.com. Either one, you can hyperlink back and forth to both. Well, thank you so much for sharing your story. You're doing important work, and we appreciate you.
I really appreciate being on today, and thank you. Thank you.
All right, this is Lee Cantor. We'll see you all next time on Retirement Tips Radio.
Retirement Tips Radio is brought to you by Business RadioX, the voice of business in your community. Currently serving over 25 markets, the Business RadioX network is growing fast. We're teaming up with retired execs and established entrepreneurs to support and celebrate local business leaders. If you'd like to make additional income while making a difference, discover more at brxteam.com.